Morning everyone, welcome to Ainsley News. It's Tuesday, the 18th of January, Crypto Tuesday. We're talking fireworks on the horizon for the crypto market. The Bitcoin market returned to a more docile state following a fear-fueled last week. Investors and traders appear to be digesting the macro possibilities within this new inflationary regime markets we've just entered, alongside an increasingly hawkish Fed Reserve. This change in tune has rattled the Bitcoin market in the short term, is at risk of taking control over its medium-term prospects. Price opened last week at 41,718 US, briefly set new correction lows down to 39,821 before reclaiming the psychologically significant $40,000 level. The remainder of the week's price action was more buoyant, hitting a high of $44,252. That's in US, of course. Significant on-chain factors at the moment are hodler profits sitting at key historical levels and the overall observable investor response, zoomed out supply dynamics and spending behavior among short-term and long-term holders, and what indicates about investor sentiment in the medium to long term, derivative activity and what it can imply about shorter-term expectations towards Bitcoin price action. The Bitcoin price is currently trading down 35% from all-time highs set in November 2021. As the drawdown worsens, an increasingly significant volume of BTC supply has fallen into an unrealized loss. Approximately 5.7 million BTC are now underwater, or less than 30% of the circulating supply. As the bears apply pressure to the in-profit cohort of holders, Bitcoin bulls are defending a historically significant level of percent of supply in profit metric. This magnitude of top-heavy supply was defended in two instances in the last few years. Back then it was in May 2020 to July 2020, the quiet recovery period following the extreme move downwards from COVID-related panic, and May 2021 to July 2021, the choppy and accumulative period following a historically deleveraging event. The reaction from this level will likely provide insight into medium-term direction of the Bitcoin market. Further weakness may motivate these underwater sellers to finally capitulate, whereas a strong bullish impulse may offer much-needed psychological relief and put more coins back into an unrealized profit. We can establish an appreciation of market-wide psychology by observing who is parting ways with their coins and why and when these spends are taking place. The percent of transfer volume in profit displays the proportion of coins spent on-chain that were last moved at lower prices as a gauge for macro fear and greed. A couple of points here. Percent of transfer volume in profit is greater than 65%, signals that a large number of coins are being spent in profit. This historically occurs during bullish impulses as holders take advantage of market strength. And the percentage of transfer volume in profit is less than 40%, signals that on-chain volumes are dominated by coins acquired at higher prices. This historically occurs in market downtrends and especially capitulation events. The sell-off this week saw less than 40% of spent volume in profit, reaching levels that historically coincide with capitulation events. Past instances at this level have preceded a bullish reversal and a period of general risk-on behavior. The low levels of profitable coin spending are also evident in the realized profit chart, which shows the profitability of BTC moved on a USD basis. In-profit holders are displaying a notable unwillingness to spend coins, with consistent realized profit values below $1 billion per day. In the face of tumultuous and unconvincing price action, this signals that this cohort of holders are patiently waiting for higher prices to spend their respective supply. Climbing realized profits, especially above the $1 billion level, and accompanied by positive price performance, signals demand absorption of coins and is a metric to watch in the coming weeks. Meanwhile, realized losses remain elevated and trending higher as underwater holders spend coins that were acquired near the market top through October and November. On average, daily realized loss values are $750 million a day, behavior that is comparable to the May to July 2021 capitulation lows. The consistency of large loss realization events is indicative of uneasiness within the market, however also reflects an estimate of demand inflows to absorb these spent coins. Sustained periods of large realized loss does put the spotlight on the bulls to provide sufficient demand support. A macro decline in realized loss values would be a more encouraging signal for the bulls, as it provides an early indication of sell-side exhaustion. We can also analyze the psychology and spending behavior of both short-term holders and long-term holders by looking at the changes in their respective realized caps and supply dynamics. The following metric we're going to talk about is calculated as the difference between the daily change of long-term holders and short-term holders' realized caps. Interpretation is as follows. Negative values, or red, signal that the STH, or short-term holders' realized cap, is increasingly more daily than the long-term holders' realized cap. This occurs during bull runs, when long-term holders distribute supply into new holders. Positive values, or green, signals that the long-term holders' realized cap is increasingly more daily than the short-term holders' realized cap, which occurs during bearish accumulation markets as short-term holder activity decreases and unspent coins mature into long-term holders. Values currently sit near zero, with a general trend to the upside, indicative of a softening of the distribution by long-term holders, the market reading a new equilibrium, and a potential reversal into accumulation. Note, however, that the process of establishing similar market equilibrium and possible macro bottoms has historically taken several months to resolve. Amidst downwards pressure in Bitcoin holder profitability, but yet favorable medium to long-term supply dynamics, future markets remains the driver for short-term volatility, with perpetual futures open interest at around 250,000 BTC, a historically elevated level. Since April 2021, this is paired with large pivots in price as the risk for a short or long squeeze increases, resolved in market-wide deleveraging events. Alongside open or high open interest, funding rates this week moved into negative territory, indicating that shorts were increasingly hungry for leverage. As perpetual swap markets were pushed below spot prices, it does add further bias towards potential oversupply of short positions close to the current price. The realized HODL ratio is a market indicator that uses a ratio of the realized cap HODL waves. In particular, the RHODL ratio takes the ratio between the first week and the first and second years RCAP HODL bands. In addition, it accounts for increased supply by weighting the ratio of the total market age. A high ratio is an indication of a high overheated market and can be used to time cycle tops. Currently, this metric is showing that the market is within the consolidation range. We have neither seen a blow-off top nor a capitulation buying opportunity. The more this metric continues to fall, the better the buying opportunity becomes. However, as we show in some charts today, there's still a lot of room to move on the downside a little bit there. In summary, there is evidence that the market is reaching some sort of price momentum equilibrium. Within that is a broader bearish market structure. Bitcoin bears certainly have the upper hand at the moment. However, modest bullish divergences are appearing across several on-chain metrics and indicators, coupled with elevated future open interest and a bias that appears to be a short, heavy market. A risk of a deleveraging to the upside remains on the table. So some good insight there for everybody today. If you want to check out those charts, jump over to ainsleyBullion.com.au, click on news, and you can read all of our news there. Check out the charts relative to today's news. That sentiment today is a little bit bearish, but ready to explode at any time. Jump over to ainsleywealth.com.au to purchase any of our cryptocurrency products. You can also swap on our website too. If you're interested in moving from bullion into crypto, that's the place to go and check out how to do it. If you're after the physical stuff, at ainsleyBullion.com.au, you can check out gold, silver, and platinum, and our own crypto, goldsilverstandard.com. That's our own crypto, built, backed by Ainsley, pegged to the real gold and real silver. Enjoy your Tuesday, everyone. We'll catch you tomorrow for midweek news.